So we just finished reporting season, so you've been busy reading up on a lot of charts, I bet, and financials coming from all the companies. Tell us any surprises out of that or anything we're looking at now. Is Elston keeping an eye on with the current portfolios moving forward?
Well, probably if I start at the overall economy and work
Yep.
backwards, the overall economy isn't terrible. Obviously, you see it in the papers every day and on the news every night. Cost of living, certainly that is an impact. And as I mentioned before, that's very much a demographic question. So your, say, university students all the way up to people who are in their mid to late 40s, costs of your household costs are going up. You've got income growth coming through, which is really good, but that's getting absorbed by not only increased household costs but also tax bracket creep, which again is we've got the election potentially coming up. It's been talked about by one side of politics, but not potentially the other at the moment. But it is a factor. You know, the tax take is increasing across Australia overall. The older demographics are actually going really well. So a lot of those may be in super. The amount of tax they're paying on superannuation income, and this is more your world than mine, but it's quite low. If you think about more defensive asset classes such as bonds and cash, are paying income when historically they haven't paid it probably over the last 10 to 15
Yep.
years. So there's more income being generated there. So your older demographic are actually saving as well as spending. Whereas the younger demographic are having to pull back on spending. So we think the overall environment for the market is going to be okay. Where we think you may see some adjustment are around those sectors that we believe are overvalued versus the earnings that they're generating and the amount of risk that they're taking on to generate those earnings. So that's where you'll see changes. Obviously, you have external impacts like Donald Trump, like a federal election domestically, that'll create volatility, but it doesn't really create volatility, the underlying earnings side of
Yep.
things. What it creates volatility is around sentiment to markets, and volatility works both ways. It potentially, if it's unjustified, it potentially gives you an entry point into a security, or it gives you the opportunity to buy more of a security where it's getting unfairly punished for something that doesn't really impact it. So really, the major factor this year will be an impact on sentiment as opposed to underlying company performance.